All right, let's talk about today's business matters. China has 1 day to decide whether it wants additional 50% tariffs from the United States. On Truth Social, President Trump threatened to impose the additional tariffs on China if it does not withdraw its retaliatory tariffs of 34%. So in the post, Trump said China has until tomorrow to reverse course. If not, he said the U.S. will impose the additional tariffs effective Wednesday. Trump added that China's requested meetings will be terminated, while he said negotiations with other countries will start immediately. And the U.S.'s second largest regional airline is set to take flight. Republic Airways and Mesa Airlines have agreed to merge in an all-stock deal. So right now, Republic operates under American, Delta, and United, while Mesa works with the United Express brand. The newly combined company will operate about 300 aircraft with some 1,200 daily departures. The company will stick with the name Republic Airways Holdings Incorporated and will be run by Republic President and CEO Brian Bedford. For now, they plan to keep their current bases and routes until they receive a single FAA operating certificate. And luxury cars are essentially idling as Audi works to figure out how the company will be affected by auto tariffs. Volkswagen-owned Audi is holding its cars in U.S. ports right now. A spokesperson told dealers in a memo that it would freeze shipments from April 2nd until further notice. Audi is heavily impacted by President Trump's auto tariffs. Its best-selling U.S. model, the Q5, is produced in Mexico. As for its remaining models, those all come from Europe and other countries. A spokesperson said Volkswagen has around 37,000 vehicles in its U.S. inventory, and that is enough for about 2 months of sales. British car maker Jaguar Land Rover is pausing shipments to the U.S. for a month over President Trump's tariffs. The Trump administration placed tariffs of 25% on all imported cars. The tariffs went into effect on Thursday. A spokesperson for Jaguar Land Rover called the U.S. an important market, but the automaker says it is enacting the shipment pause in April as it, quote, addresses the new trading terms. According to the company, Jaguar Land Rover has over 200 dealerships in the United States. And launching a lawsuit to prevent a lawsuit. DailyPay is suing New York's Attorney General Letitia James. This is in an attempt to stop a lawsuit that claims its product is an illegal loan. 2 years ago, James started investigating the Earned Wage Access Industry, or EWA. So DailyPay describes EWA as giving employees access to their earned pay before regulatory or regularly scheduled paydays. The company says it charges a fee to expedite money transfers, similar to ATM withdrawal fees or Venmo transfers. DailyPay says it does not create a debt obligation for workers. New hope for a promised merger between Japan's Nippon Steel and U.S. Steel. President Trump has ordered a U.S. National Security Panel to take a fresh look at the bid. In a memo, the president said that the Committee on Foreign Investment will decide if any further action may be appropriate. Former President Joe Biden had blocked the merger over national security concerns. The two companies sued, alleging Biden's prejudice influenced the decision from the committee who reviews foreign investments. Investors took Trump's call for a fresh review to mean he's considering greenlighting the merger. And more on the Trump tariff impact. Oil prices plummeted to their lowest level since 2021, and base metal prices in China also tumbled. Here's the story.
Oil slid 3% on Monday to its weakest level in 4 years. Brent futures and US West Texas Intermediate crude futures hit their lowest since April 2021. Both benchmarks have lost more than 10% over the last week. It follows a large drop in oil prices Friday as markets worry US-China trade tensions could cause a recession. They fear it could see a fall in demand for crude while OPEC Plus looks to increase supply soon. Oil prices are an important indicator for Russia's financial health.
Of course, this is an indicator that is very important for us, very important for filling our budget. And of course, we are following the situation very closely, which is currently extremely turbulent, tense and emotionally overloaded.
Commodity markets, including metals, also fell. Base metal prices in China dropped, with copper on the Shanghai Futures Exchange falling 6%, hitting its lowest in more than 3 months. Gold climbed to a record peak last week, but later dropped amid a wider market sell-off. However, gold prices paired earlier losses Monday as some safe haven demand filtered through, and analysts held an upbeat outlook for bullion.
The rich are getting much richer. The 2020s have been great years for billionaires, starting right after the pandemic, when their total wealth made a significant leap. And one place where billionaires have prospered most is the United States. NTD Sean Marshall takes a look into where all the billionaires are coming from.
According to the Forbes 2025 Billionaires list, the United States harbors the most billionaires on Earth.
Billionaires are exploding. We're talking about them all the time. The number of them is increasing dramatically.
But they're not coming out of nowhere. Business strategist Melissa Franks says the best way to understand where billionaires are coming from is to look at their histories.
And 25 years ago, most of them weren't even millionaires. So really what's happening is it's a multiple decades long journey to go from the millionaire or aspiring millionaire to billionaire.
And there are a couple reasons why the United States has more billionaires than any other country. Frank says America's economy is strong and diverse, and that we excel in many industries like manufacturing, tech, and energy, not just one.
And what that allows is for these millionaires and billionaires to network with each other on their home turf and help each other invest and have new ventures go through, because we're all operating in the same local economy to propel these industries forward. And the United States is the best breeding ground for that to happen in a nimble, efficient way within all of the regulatory guidelines that exist to fund and grow businesses.
The traditions and family values of the elite, once held as closely guarded secrets, are now available in books and on the internet. But the average person looking to generate wealth might not know where to start. That's when a professional financial strategist like Frank's comes in handy. She mentions that there are many processes that billionaires engage in on the journey from millionaire to billionaire, which they don't often talk about.
And nobody's talking about how they actually do it. They're just talking about the results at the end. And that's the secret.
So there's another world and way of doing things that most of us should probably study a little more closely before starting our side hustles and business ventures, which is to look into exactly how wealthy families have been doing things for generations. Sean Marshall, NTD News.
Okay, we're bringing in our guest today, Brian Kuderna. He's a certified financial planner and author of the book, What Should I Do With My Money? So good afternoon, Brian. So let's dive into some practical advice on budgeting and saving money, especially with so much economic uncertainty right now. So I'd like to know some of your tips on how to save money. How do you recommend structuring a budget that is easy to stick to over time?
Sure, and thank you for having me. I think one of the most important things is just the classic ideal of dollar cost averaging. And all that means is doing your investments or whatever your portfolio allocation is on a systematic basis. So with most of my clients, everything we do on a monthly basis, monthly contributions into various retirement plans or brokerage accounts. And that takes a lot of the guesswork and the timing out of the equation, especially when you have the turmoil that we're going through right now. We can say, stick with the process, stay the course, and remove that emotion from the planning. And I think that is always the best course of action.
Is there a rule of thumb for what percentage of income should go to needs, wants, and savings?
Yes, that's a great question too. I always like to see my clients have a 20% gross savings rate. All right, so think if your household is bringing in $200,000 a year gross between your two salaries, perhaps, then that means 20%, that's $40,000 a year that should be saved somewhere, whether it's the 401k, the IRA, the whole life plan, rental properties. The different vehicles that we want to use are how we go from good to great, but the baseline has to be that good habit. And like I always tell people, keep it simple, 20% gross savings rate. You do that year over year, you are going to be on the fast track.
Okay, what are some of your strategies for handling, unexpected expenses without derailing your budget?
Yeah, so one of the best ways to handle that, frankly, is to be prepared. Okay, like I often say, like in jujitsu, when you get stuck in a tough position, and you say, "Hey, coach, how do I get out of this?" and they say, "Well, don't end up there." It's the same thing with unexpected expenses or credit card debt. If you're prepared, cash is king. Okay, if you have liquidity, if you have a buffer ahead of time, that allows you with a rainy day fund to handle those unexpected expenses. So just like going into this year, when you say, well, what do I do now with my portfolio? All right, if you made adjustments back in December or January, you're ready for this. If you didn't, now we have to kind of weather the storm. And liquidity is the thing that can always see you through tough times. So that's where people, you can't, undervalue cash. You really, really got to be able to always have a healthy 6 months of expenses, emergency fund ready at all times.
Okay, let's talk about that, this emergency fund. What would you say is the ideal size of that fund, considering today's economy?
Yeah, so I think the ideal size, kind of like I alluded to, is 6 months of your expenses. So if you just take a moment one day, run through your budget and say, hey, what's my credit card bill usually look like each month? What's my mortgage or my rent? Tally up all those fixed expenses. Maybe you add in a little buffer. And if you say, hey, it looks like as a household, we're spending $5,000-$6,000 a month just living. All right, then 6 times that, you should be having $30,000 to $40,000 in cash. And when I say cash, that's your checking, savings, money market, money that you can access in an instant. It's there, it's not at risk. And I know some people, they may be hearing that like, oh, I'm not even close to that. That's okay. That's why it needs to be a goal. Okay. Rome wasn't built in a day. Keep that as a goal. Let's try and get there, then maintain. And then that can allow you to proceed to more investments and more fun things.
Okay, any thoughts you have on the tariffs? What's the impact going to be on people's wallets?
Yeah, so the tariffs, I think, just came in last Wednesday. I think a lot harsher than most of us had expected. So there's two things going on. One, it's hitting people's net worth when they look at their portfolio, obviously. And then the other is going to be the cost of living, which affects everybody, whether you're high net worth or you're just getting by. So I think what's going to happen is, so many of these tariffs, if you look at the international rate that we were charging out there, it was somewhere around 3%, I believe. That went up as of last Wednesday to about 23%. Okay, so that 20% increase on average of just international tariffs, that is going to get passed on in a number of ways. You're going to have the exporting country and the exporting manufacturer trying to work within that. You're going to have the importing company, whether that's Nike or Apple or Microsoft, saying, okay, how are we going to eat some of that expense, that new tax? And then inevitably, some of that will be passed on to the consumer. Okay, so they won't notice immediately a 20% hike on the sticker price, but they will see a portion of that. That's inevitable. So I think what everybody's hoping for right now is there any way that these other countries come to the White House or Donald Trump goes to them and says, hey, let's negotiate this. Let's find a happy medium and perhaps we reduce or just waive some of these tariffs. And then I think that will allow the economy to really get back into stride.
Okay, two things, Brian. So basically you're saying the only two options is that if companies eat the cost of the input costs increasing with the tariffs, or consumers pay the cost, right? Is that what you're saying? And what are some of the tips that you have to help people who are falling behind on payments, for example?
Yep. Yeah. So there's those two parts. And the third is the exporting company. So where it originates, the manufacturer, they're probably going to have to try and work with their customer base as well. So I think you're going to see three different areas where there has to be some absorbing of that new cost. But to your question, what can the consumer do? They're going to have to become a more astute shopper. Okay. If you were looking at, hey, I liked getting my Nikes, my kids' new basketball sneakers for $100, and now those are going up to $130, $140, and you just extrapolate that over all the goods, products, and services that we use every day, I think it's just going to encourage people to start pivoting and saying, okay, maybe in certain scenarios, I can't get the name brand product. Maybe I do need to go to Target or to Walmart and say, what other deals are out there? And it's going to be a period that folks are going to have to kind of get acclimated to and work through and maybe become a bit more of a bargain shopper than they were previously, at least until things start to settle. And whatever we see as this new normal, then we can adapt and we can kind of readjust to what we're used to. But in this transition period, for most people that do have to pay mind to their wallet, you're going to have to be a better shopper and also a saver. You might have to tighten the belt in some areas.
Well, all right, Brian, great insight today. Thank you very much for coming.
Yeah, thank you very much for having me.
And Apple is trying to shut a backdoor order to its encrypted cloud storage systems. The Investigatory Powers Tribunal has confirmed that the tech giant is appealing the order from the British government. In February, the Washington Post reported that Britain issued a technical capability notice to Apple. It called on the company to enable access to encrypted messages and photos. Britain's Interior Ministry said this is to prevent serious crime and would not affect freedom of speech. Apple declined to comment but referred to a previous statement which it said would never build a so-called backdoor. The Trump administration has shared a proposal for weight loss drugs to be covered by Medicare. The Centers for Medicare and Medicaid said it did not move forward with the Biden-era proposal. It would have allowed more Americans to afford new medications in the GLP-1 class. These drugs have been shown to reduce weight by as much as 20% and prevent type 2 diabetes, but they cost as much as $1,000 a month without insurance coverage. Right now, Medicare covers the drugs such as Lilly's Mounjaro and Novo Nordisk's Ozempic for diabetes, but not the versions approved for obesity. President Trump threatened to further increase tariffs on China on Monday, raising the possibility of further escalation in trade tensions that has already wiped trillions of dollars from global markets. Earlier, I discussed the impact of Trump's tariffs with Christian Briggs. He's an economist and CEO at Hard Asset Management. Take a look. So we've seen trillions in market value wiped out. Why is the market so concerned about tariffs?
Well, first of all, thanks for having me on the show, but let's go right to the heart of it. Tariffs can be used in such a way to leverage a negotiation between two parties, in this case, two different countries or continents, in order to create a playing field that is fair for everybody. But the investors want to know how much and how long will the 34% that China just levied on us be in effect for? How long will it take Trump and President Xi Jinping to determine that what's best interest for both countries is a little bit less aggressive tariff? It's almost like a little bit of a fight, kind of a little bit of a respectable fight, mind you, because countries do need each other. But the investing community right now is nervous because what it does is it brings uncertainty to the PE ratios, obviously price to earnings, and will companies like Caterpillar or Deere or even Boeing be able to sustain the current market anticipation of what their earnings are, their revenues, in light of all of these tariffs, because it's an uncertainty. And remember, uncertainty, nobody in the stock market likes uncertainty.
So, Christian, you've said before that certain income groups in the U.S. are already in recession. But if the tariffs stay for longer, but do you think we'll see higher income groups experience a recession due to these tariffs?
Absolutely. Let's talk about that. The lower bottom half of America, that 25 to say 35%, their wages absolutely did not keep up during the Biden administration, one of the most inflationary fiscal policies in over 40 years, not realizing that the inflation does not hurt as much the top 25% of the income holders. It's the bottom 50% that really get taxed. Their wages aren't typically at the same growth projectile rates as the top 10, 20%, or even the top 5%. So we are in a recession in the bottom. You know, when you look at credit card delinquencies, foreclosures, car repossessions, that's in that bottom half, especially in the subprime market on automobiles. There is now starting to see some of the highest increases in both repossessions and 30, 60, and 90-day late payments. So the bottom half's in a recession. The top half, I'm not so sure we're going to see it as effectively and quickly, but everything is going to slow down. When you see Restoration Hardware, which is a high-end furniture manufacturer and retailer, give a lower guidance, and it was considerably lower guidance, that tells you right there that top 5, 10, 15% of America has already started slowing their spending. It may not come to a grinding halt, but I can tell you definitively, if this thing lasts more than 30 or 60 days, we will have issues from the very top to the very bottom.
Do you have a ballpark for how long the benefits will start to kick in?
Okay, great question again, because a lot of people don't look like we should look. That's down the road. So I would say the benefits of the tariffs, provided they're negotiated in a method that is equal or even give us a little bit more of a favor, which I believe Trump's going to come out of the better end of the deal for America, which means all America wins on this. The benefits will be seen in about 12 months. It takes effectively time. And I'll give you a very good statistic that proves the point. In 2018, when Trump levied those heavy tariffs, especially on China, and the rest of the world obviously followed suit, China was the behemoth that he was really going after because the trade deficit, right now with all of our trading partners, we're running over, $1.3, $1.4 trillion trade deficit. So the benefits are going to be seen. But remember, in 18, when those tariffs hit, within less than 22 months or within a period of about 20 to 22 months, we were able to reestablish, whether it was bringing back or organically grown, 462,000 manufacturing jobs. These were high-paying jobs. Had COVID not hit, our analysts right now were predicting about 600,000 jobs. So the tariffs can work, surgically done, which he did, done in a time and a manner, which he is. I think the benefit's going to be massive, provided that China comes to the table and doesn't prolong this trade war.
Okay, Christian, great insight as always. Thank you.
Thank you very much.
President Trump said yesterday that China was close to approving a deal for the sale of TikTok. He said the communist nation backed out over the new reciprocal tariffs on Chinese imports. TikTok is required to divest its U.S. assets or face a nationwide ban. Trump has effectively paused that ban until mid-June. Parent company ByteDance said last week that it was discussing a potential solution with the U.S. government. It says any agreement with Washington will be subject to approval under Chinese law. Trump last week extended the deadline for TikTok to divest from its Beijing-based parent company in 75 days. Several bidders have expressed interest in purchasing the social media app. Those include Amazon and a group led by OnlyFans founder Tim Stokely. Workers in the Hollywood film and television industry rallied yesterday, saying California isn't doing enough to encourage more production work in Los Angeles, as the industry's rebound has been slow since the end of the 2023 acting strike. NTD's Sean Marshall has more.
Hollywood costume designers, set builders, musicians, producers, and business owners attended a rally on Sunday, urging California legislators to increase tax incentives and enact other measures to encourage more film and TV production in and around Los Angeles. Producers and actors were there too. Several wore t-shirts with a quote from The Wizard of Oz, "There's no place like home." Hundreds gathered at a local soundstage to make their case to bring back the production opportunities that have been fleeing to other states. Workers were hoping for a production rebound in Los Angeles after the 2023 strikes by writers and actors, but the comeback has been slow. Gavin Newsom, California's Democratic governor, has proposed boosting the state's film and TV tax credits to $750 million a year, up from $330 million. Advocates support the expansion, but also want other measures, including making it easier to get permits. Many speakers said Hollywood was filled with middle-class workers, not the wealthy celebrities that are the public face of the industry. They also noted that less production takes a toll on local businesses, such as caterers and dry cleaners. Sean Marshall, NTD News.
Okay, on to markets. S&P 500 closed lower today, and this is after a volatile session. And it comes as investors' fears of an economic slowdown and rising inflation. And this was intensified following President Trump's firm stance on tariffs. His threat to raise levies on China as well added to the market anxiety. So since Trump announced sweeping tariffs last week, U.S. markets have suffered major losses. S&P 500 fell 10%, 10.5% to be exact, in 2 days, wiping out around $5 trillion in value. This is the worst drop since March 2020. And the Dow is now in correction territory, and the NASDAQ has technically entered a bear market. And that's it on Business Matters today.